Ladies and gentlemen, I am JC Parets, and we are back with the morning show. Full disclosure, this should be a national holiday in America. We celebrate the Super Bowl. For some reason, it's still not a national holiday. When I become president of the United States, I will make it a national holiday. No big deal. Starting a little late, no big deal. We got Steve Strazza in the house. We got Fonz on the ones and twos. Spencer Israel in a bachelor party in Chicago, partying a little too hard this weekend, so he won't be joining us. We will be with Jared Dillian. We will be talking about the market. China absolutely ripping. Tariffs. Hilarious. Hit it, baby. Hit it, Fonz. Let's go.
Good morning.
All right, we are back. Steve Strazza representing the Chicago Bulls. In case people forgot what a three-peat actually is, you got to win 3 times. Tell him, Mr. Strazza.
You're right. Good call.
Chicago was so good at the three-peats, they did it twice.
Is anybody happier about the results of last night? Is anybody happier than Tom Brady?
Why does Tom Brady care?
Wasn't Mahomes starting to kind of encroach on his greatness? He's the only guy who's close to a lot of his numbers.
Dude, Tom Brady was 50 years old and still freaking, MVP candidate. No, Mahomes has a ways to go. No hate on Mahomes. He's the man. But, he's not in the Joe Montana, Tom Brady category yet.
I don't know. I feel like Brady had to have a little smirk on his face watching that last night. That was an all-time terrible Super Bowl performance. Peyton Manning had a
listen, shout out to the Eagles defense, right? When they say defense wins championships, well,
really,
that's what happened. You know how many times the Eagles blitzed last night?
None. They weren't blitzing at all. Yeah.
0.
Yeah. No, listen, it's
very impressive.
As much as I don't like them, they're refreshing to watch. They're winning games the old way. Just pounding it out, playing good defense, running that ball. That's old school football.
As things change, some things just stay the same, right?
The game was as bad as it gets, and the halftime show was somehow worse. This was an all-time terrible Super Bowl. I'm not just saying that because I was super unexcited about it, but everything about it was terrible. Even the commercials, there was really nothing there. It was boring.
I have a million kids, and we were up in the Poconos with friends, college buddies, and their kids, nephews and nieces. It was just a shit show. I got to tell you, I really like the Poconos. I really do. I'm into it. I'm really into it. We're already house shopping. We're we got to get a crib up here.
And
it's not that far. It's only an hour from the house.
You were there all weekend. Just get like a log cabin in the woods kind of situation. Yeah. Nice. Yeah. That's cool.
Yeah, right by the lake. It was fantastic. It was fantastic. All right. Enough of that. Things are moving. You got people lying to you about the market's going to crash because of tariffs. You got people lying to you because it's the end of the AI, because of the deep sack or whatever. They're just lying to you. So you can either be, a slave to the headlines, or you could step up, be a grown adult, and actually focus on what matters instead of the gossip columns. Fortunately for us, we don't even know where to find gossip columns, so we just focus on what pays, and that is price. So what do you say we do a little state of the markets? Huh?
Hims did have a commercial, and they're great marketers.
I noticed that. I noticed that. Yeah. All right. Fonz?
My favorite one though was the John Denver Country Road Rocket Mortgage. Every American should have a shot at the American dream. That was just a nice commercial. That was nice.
I wasn't paying enough attention to are you guys serious right now? They have to send me a text messages? Okay. We'll do an abridged version here of the market futures. What we've got today is we have the Dow futures. Come on, guys. What are we doing here? What are we doing? Are we not Sorry, guys. I don't have my act together this morning. Came in from out of town. Dow, I got the Dow up 250 points. It's 44,669. We got S&P futures up over 0.5% this morning, getting close to 6,100. Nasdaq 100 futures almost up a full percent this morning at 21,800, just shy of that. 30-year bond futures are flat. Gold up 1.5%, 29.30 for gold. New all-time highs for the gold. We got crude oil up 1.2%, pushing 72. Copper up again, up 1.5% as this China trade continues to work. Over in funny money land, you got Bitcoin up 1.6%, 98,000 flat. Ethereum 2670 up 1.6%. Solana back above 200, now at 208, up 3.7%. With total crypto market cap, if Spencer Israel was here, he'd be very excited. 3.16 trillion. With the dollar flat this morning, all eyes on the dollar as these people lied to you about the market collapsing because of tariffs. Were you ignorant enough to listen to those headlines instead of just following price? Don't front. Don't front. Did you believe the headlines? Some of you did. Some of you did. I know you did.
Dollars had a bounce here. Dollars had a little bounce here past couple of sessions. It's really nothing burger though. So let's see if they can knock it back down this week, back into that box.
So what's the big level we're watching here? 109 for me is the level. 108.80, 109, right? Is that about right?
Yeah, throw it up.
And here we are at 108. So we're right there, right? Right there.
The big action coming in this morning are the futures overseas. Or actually, the market's closed now, but big intraday rally from Chinese equities. Came back, closed the day out really strong. Throw up the Hang Seng. I think we just lost Mr. JC. If you throw up the HSI, this Hang Seng index, I mean, this is as good as a primary trend reversal pattern comes. You know, you got several years of basing here, tested this level, this base breakout zone a number of times already. Call it like 22.5, right, on this base breakout level here. That gets you done. But what we already had, you could see this third red arrow drawn on this base. We launched higher. We had this momentum surge end of last summer, early last fall, right? Surged right up to that breakout level. They slammed it, went back into corrective mode for several months, and now we're back. We're going to give it another shot. I would imagine now being the fourth test of resistance, and all these charts look the same. We'll throw up FXI next. Being the fourth test of resistance, I'm starting to think that enough or all of the overhead supply here has probably been absorbed, and it's time for them to break on out. What do you think about that?
Let me tell you something, Mr. Strazza, and all you folks out there in internet land. I am a keen observer of human behavior. Keen observer, right? Observing, right? Like my grandmother. My grandmother comes over, and you can take the chart off. My grandmother comes over, and she judges. You know, I pour a glass of wine. She's like, oh, okay, it's a little early, but all right, it's just one. Right. And then 2 and 3, and then she starts judging me. She's like, I'm counting how many, right? So just like my grandmother's always judging me and like judging our, you know, all of our behaviors. Shout out abuela. I'm judging the behaviors of others as well and acting accordingly. And so people on the internet, Strazza, true story, are telling me, they have the audacity to tell me that stock market breadth is weak. And so in my humble opinion, very humble opinion, I think that the people that think that stock market breadth is weak are making 2 mistakes. Number one, they're trying to do some algorithm where they take one number and subtract it from another number. And like, that's like the magic answer, which is silly. Right. Some are even sillier where they take one number and divide it by another number. Like that's the answer to market breadth. And they don't bother to actually count. I would encourage people to count. Take the time to count. Your algorithm probably sucks, which is why you're wrong all the time. Just count. It's not that hard. That's number one. Number two is the old home country bias. If you think that...
I was hoping you were going to go there. Yeah.
You know,
you nailed it.
One of those that are so confused about the current market environment because you haven't bothered to count. You think that stock market breadth is weak? It probably has something to do with the fact that maybe you are not looking at other countries and you think your country is the only one that matters when it does not. It does not. There's so many other countries and they're all going up and making everybody money. And just because you have too much exposure to your tech stocks and you're not making all that money, that's not the market.
I think, JC, this is probably the best that international breadth has been this whole cycle.
I am told that market breadth is weak, and if you think market breadth is strong, you are wrong, and you're confused, and da-da-da-da. Okay.
Yeah.
I guess
And I got another one too, right? So you're basically saying you got to look outside the U.S. stock market to see the positive, the breadth improvements that are going on for sure. Guess what else? There's just other risk asset markets. What's going on with commodities right now is very interesting. And I think that flows through.
There aren't any stocks making new lows. How can you have weak market breadth without fucking stocks going down, dummy?
Still would like to see more making new highs, but point taken. Yeah,
we are incredibly blessed for many reasons, but today especially, friend of the show, friend of ours, Jared Dillian, also a keen observer of human behavior, here on the show today, and we are going to talk about the current status of market sentiment and where we are in the cycle. Very curious to hear his thoughts. Very keen observer, Jared Dillian. I've been observing him for many years, and I know, and he's watching. He's watching.
Jared,
he's a thinker. He's a thinker.
Jared's one of those guys who just has a special read on sentiment.
Yeah, agreed wholeheartedly. What do you say we hit it? Bring on Jared. Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Mr. Jared Dillian, how are you, sir?
Yo, what's up, JC?
Let me ask you this. What do you like doing better? Investing in the stock market or DJing?
Oh, DJing. If I can make a living as a DJ, I wouldn't be doing any of this. I mean, but the reality is that, the newsletter and everything else is how I pay the bills. So
yeah, the DJ don't play that well, right?
I had a gig in Miami. I don't know if you saw the picture, but I was playing at the Real Vision crypto gathering last week in Miami. So
how was that?
It was awesome. It was really good. Yep. Yeah.
Did it mark the top? Was it a little frothy, the behavior and the activities there, or you think that it's still on par with where we're going in the cycle?
No, I think it's still on par with where we're going in the cycle. Yeah. I mean, I've come on the show a couple of times and I think I've been, leaning bearish every time, but today I'm actually leaning bullish. So
now let's hit that right there. So let me ask you this. So this over the last year or so, you've been leaning bearish when you've come on here, and today you're leaning bullish. Explain to me why you were leaning bearish then and what's changed, and now you're a little bit more optimistic.
Yeah, it's kind of complicated. So I mean, basically, stocks have really gone nowhere since the election. We had
isn't S&P's up 5.5% since the election?
Yeah,
pretty good.
Look at the chart of the S&P; it's going sideways, And we had a 5 or 6% drawdown. We had a big drawdown in Apple. So I took a couple of shots at the short side. It didn't work, and when I think about like the bigger picture here, sometimes I get too deep into the weeds on the reverse psychology and the reverse psychology and the reverse psychology. And, a couple of months ago, I was saying look, Trump is fully priced in. There's, we've got his whole first term is priced in and there's nothing left. But actually, I don't think that's true. I think this Doge movement is global. I think it started with Malay in Argentina, and it's going global. And
Canada.
Yeah, I mean, if Pierre gets elected, now that actually got a lot more complicated because, we're putting tariffs on Canada and the Canadians got all pissed off and now they're going to vote for Mark Carney. But I still think Pierre is going to win. But yeah, there's a lot of places in the world which are looking at what's happening in the U.S. and Argentina, and it is bullish for risk assets globally. So I'm just trying not to overthink it like I usually do,
And then so you're seeing that in Argentina, of course. You're seeing it in America. You're seeing it in Canada. What about Europe? You think Europe is gonna like slow down on the communism and the socialism and be more free market, or no? Like joking, more free market.
There was a poll recently in the UK. The Reform Party is actually ahead in the polls, ahead of Labour and the Conservatives, the Tories. Reform is actually polling in first place in the UK, which is something I thought would happen. So, yeah, it's happening in the UK, not really so much in France yet or other places. But look, like Latin America, if you look outside of Argentina, Argentina's actually gotten a little bit expensive. But if you look at Brazil, Colombia, Chile,
Chile, Peru.
all this stuff is trading at like 6 times. It's trading at like 6 times. I did a whole piece on Colombia in my newsletter. I talked about Gustavo Petro. The guy is garbage. He's an alcoholic and a drug addict, and he stays up all night like picking fights with people on Twitter. If it wasn't for the opposition in Colombia, they'd be Venezuela by now. There's an election next year. He's going to be gone. Like, just look around the, I'm more, I heard you talking about international stocks before I came on. I'm more bullish on international, even more than I am the US. There is so much cheap stuff out there. Look, like the time to buy the US was in 1982 when you had 6 PEs and 6% dividend yields. And that's what you're getting in a lot of the world if this Doge movement goes global,
Jared, I want to get into sentiment because I respect your how you observe, like what you were just describing before. But before we get to that, you've mentioned Latin America. We've talked about Europe. We've talked about Canada. Not once have you said anything about Asia.
Yeah, so I have a tough time with China. China is cheap, like a lot of the world. I have a tough time buying stuff in China. It's for all the obvious reasons. It's a communist country. We're in the middle of a trade war. Blah blah blah. If given a choice between Latin America or Europe or Asia, I would pick Latin America and Europe over Asia for sure.
Okay,
yeah.
Interesting. I don't necessarily disagree. I would probably say, these European banks are ripping. German DAX making all-time highs. So I'm not like against Europe, but in terms of like that mean reversion from like the doldrums of the shit show that has been Latin America and Asia over the years, I like that mean reversion in both personally. I think Europe does well in an environment where that's happening, but probably not as well as those others. That's how I see that. Talk to me about sentiment. Jared, again, like I said, a keen observer of human behavior. I've been watching you for many years. Where do you think these humans are psychologically with where we are in the cycle? Seems like they're non-believers.
Yeah, there's some doubt. There's some skepticism, which is a good thing. If you're long, you like to see some doubt and some skepticism. We are not at the point in the cycle. The way I always know we're at the top of something is when the longs are making fun of the shorts or the people who are not in the trade, right? And I'm not seeing that. I'm not seeing it on Twitter. I'm not seeing that anywhere else. I'm not seeing victory laps, so I don't think sentiment is stretched at all. I think it's neutral to slightly bullish. But it could it's got a long way to go before it gets really hot. So
we do a pretty good job, I think, of aggregating sentiment out there, looking at newsletter writers, individual investors, active investment managers, the list. And seeing newsletter writers and individual investors as pessimistic as they are, seeing the most amount of bears amongst individual investors since early November of 2023. Most amount of bears since then, with the stock market at all-time highs, S&P down, NASDAQ, German DAX, all at all-time highs, and yet the most number of bears since the fourth quarter of 23. Wow. What is it that you think people are so scared of? Like, do you just think like it's tariffs and Donald Trump, or do you think that there's other things that have people so scared in the middle of a bull market?
Well, first of all, let me say that you like to see it. If you're a bull, you like to see that type
No
of
question, no question.
you like to
Yeah,
see that stuff.
yeah.
Um,
Surprising nonetheless, right? As much as I'm rooting for people to be angry and pessimistic, right? Talking my own book, it's still surprising just how angry and pessimistic they are.
yeah, I mean, a lot of it is based on political party. Like, I don't know if you saw that chart that was going around Twitter the other day that showed inflation
Yeah.
expectations for Republicans and Democrats.
Yep.
I mean, honestly, I think that left-leaning people are the people who are, pessimistic here.
Yep.
I think that accounts for a lot of what's going on. And conversely, I think, the Trump supporters are super bullish here. So I think that's why you're getting that kind of divergence. So
That was unbelievable. I'm looking for the chart just so I can show this because it was just, I mean, it's just so good. I think I have it here. Hold on one second. It's too good not to show. And this isn't, oh no, I don't have it. Here. So what Jared is talking about is a chart that shows the inflation expectations for Democrats and the inflation expectations for conservatives. And here I actually have it right here. Throw up the new slide too, please, Fonz, if you will. So this one comes from the University of Michigan. And just look at the difference. I mean, wow. So in blue, you're looking at the Democrats. In red, you're looking at the Republicans. This is wild, Jared. I mean,
I know.
like, wow. Like, just think about how weak humans are that they cannot overcome their political biases.
It's incredible.
I mean, it's fascinating. So it's our job as investors or traders or whatever, market participants to exploit these human flaws and humans' inability to overcome their political biases. It's our job to extract profits from those human flaws. And you're seeing it in real time. This is a great chart, Jared.
Yeah, I should have sent you that ahead of time. I didn't think of it. Sorry.
You saw how quick I got it? You saw that? Come on.
But no, I mean, no, I like that is, that is kind of my thesis about trading sentiment in general is that, human beings are fallible. And Morgan Housel has a quote about biases. I'm trying to think of it right now, but
Morgan Housel has a lot of quotes about biases.
yeah. And we all have biases. And if you think you don't have biases, you're actually more biased than you think, which was the essence of his quote, So
spot on, Jared. So why don't we zoom out a little bit here? Let's talk where we are in the cycle, right? When you look at the S&P 500 and the Dow and the NASDAQ, we're, let's say, halfway through year 3 of this bull market. In a lot of cases, not much participation, a little bit from Europe, nothing from Latin America, nothing from Asia. So to suggest that we're late in the cycle, it's tough when you think about it from a global perspective. You tend to see breadth deterioration for quite some time before the indices peak. And yet we haven't seen that breadth deterioration at all. So we haven't even started the clock yet, right? So like, to me, the weight of the evidence suggests it's got legs, this bull market. And based on current sentiment just confirms that. So it's not like we're starting at sentiment and then working our way there. We're starting with what's actually happening and seeing if sentiment is actually frothy or confirming that it probably still has legs. And as angry and pessimistic as investors are, particularly the liberals, as we're seeing, I think that it's got legs, right? So that's how I look at it. You want to poke holes in that thought process?
No, I don't. I actually agree. I mean, the one thing I might poke a hole in, I like the work that Jason Gepfer and the sentiment traders guys do.
Yeah.
And they've been pointing out some warning signs over the last couple of months. I don't remember the date, but there was a day where the S&P was down about 2%. And 300 stocks in the S&P were up. Do you remember this?
Yep.
And basically, the sentiment trader guys said that this has only happened twice in history, and they were both right around the top of the dot-com bubble, right?
What kind of sample size? A lot of these, I'm not saying sentiment trader, but like just like in general, like there's a lot of data mining that can be done, to show how rare a particular event is. When you and I, who've been doing this for a minute, know for a fact that every single day something that has never happened or rarely happens, right? So like, how do you think about that? And how do you take like one data point and, extract what you can do from that one data point versus like a weight of the evidence, sum of the parts, right?
Yeah, I mean, it is a data point, and I look at it in let me put it this way: if I see a tweet like that, I don't like go out and sell stocks. That I don't do that. Like it's really, it's a preponderance of the evidence. And we've been talking about how there's skepticism and there's doubt, and look like I actually I had a couple of good shorts in the last couple of months. I got Apple. I did that pretty well.
Nice.
Got a couple other ones. But I think we're in the middle of a consolidation, and if we break out of the consolidation to the upside, we're gonna have another leg up. I do look at valuations. But valuations are not super useful. The US is
They're
overvalued
not
by a
helpful
lot
for timing purposes, right,
for
Jared?
timing
Like,
purposes.
it kind of helps maybe put things in perspective, but from a timing standpoint, expensive could get way more expensive for years to come.
Yep.
And cheap can stay cheap, as we have seen, for
Yep.
years to come. So like it's not really helpful.
Yeah, I agree. Yep.
And so if you know that valuations are mostly a distraction, right? Because we have the data, we know, then like where is your primary focus when trying to identify the type of market environment we're in so you could decide which tools and strategies are best, for what you're trying to accomplish?
Yeah. I mean, getting back to what we were talking about earlier with Latin America and Europe and stuff like that. I don't want to say that I'm a political trader, but I've been through this twice on Argentina. I got long Argentina back in 2014 or 15 when Macri got elected, and then when Milei got elected. When an economy that is unfree becomes free and is deregulated, you're talking about 6, 8, 10% growth for years to come, And I think there's a lot of opportunities like that around the world. So yeah, I'm bullish on U.S. stocks, but I actually think there's better opportunities overseas.
Yeah.
I have a large position in an ETF, which is a European high dividend ETF. It pays like 8% dividends. It's like super deep value. And I'm not necessarily a value investor, but I would rather buy stuff like that than chase U.S. stocks higher. So.
And then, so what does the commodity market say to you when you see gold making new all-time highs? Copper these days is ripping, right? Like you got people crying over the weekends about how tariffs are going to ruin everything and China's going to crash. And yet Chinese stocks keep going up and copper is ripping, which is consistent with Chinese stocks going up. So gold, copper, some of these other soft commodities, everything but crude oil, essentially, right? So like, how do you think about what's happening in the commodity complex despite such a strong dollar over the last 4 or 5 months, I might add? Does that like reiterate what you're talking about in Latin America?
Well, I actually pay a lot of attention to the commodity markets and the commodity indices. Like, I want to say it's the which commodity index is it? The Bloomberg Commodity Index.
Yeah.
It's about 17% oil and 17% gold, and I think it's like 8% copper, and then it goes down from there. This has not really been a broad-based rally in commodities. Like gold has done really well. You've had some soft commodities like coffee and cocoa do really well. But ags are still around the lows. Cotton is still around the lows. It's I mean, you've had a rally in the index because gold and copper have done so well, but it really hasn't been a broad-based commodity rally like we've seen in other cycles, you know.
And they're off. Here I have I've got the copper chart to show the folks. If Fonz, if you could throw up the new slide 2 here to give folks some perspective, because you know, Jared, obviously you've been at this game for a minute. Myself, a day does not go by that I don't look at a copper chart. But for those of you that have not been looking at copper every single day for 25 years, this is what this looks like. And you know, I don't know, I'm no genius, but this doesn't look bearish to me. This to me would suggest that, you know, we got $7-8 copper at some point in the next couple of years. You think that's a little dramatic, or you think that's in line?
No, I don't. And actually, if you zoom in a little
It
bit and
sounds dramatic, doesn't it? Like
if you
copper at 8 sounds like, oh my God, right?
no, if you zoom in and you look at the last year, the last 12 months of copper, you had a downtrend, and it recently just broke out of the downtrend. And it's so I don't know if you can pull up a 1-year chart of copper, but that's even more compelling. So
I can absolutely pull up a 1-year chart of copper. But yeah, you know, you got so at the very least, as I pull it up here, at the very least, we get back to last year's highs, which takes us north of 5. And then from there, I guess we'll see, right?
yep.
So you don't think $8 copper is JC hyperbole?
No, I mean, the thing with commodities is that you have commodity traders that say, "Oh my God, coffee is at $4. How can it possibly go any higher?" And then it doubles. Like people did this with cocoa. You know, cocoa started to run. Which, by the way, cocoa. If you look at a super long-term chart of cocoa, it was like a 40-year consolidation that it broke out of. Right, like. And people say, "Oh, it can't go any higher," and they absolutely can go higher. I love trading bull markets and commodities, right? Because they just destroy everybody's expectations, you know.
Jared, like I said, you know, you pay attention to a lot of things. You're analyzing the human behavior, which I truly appreciate. It's why I've mentioned it so many times. Not everybody's like that. You are, I am. So game recognized game. You know what I'm saying? I can't DJ like you, but I can judge humans. What do you think people are ignoring? You know, we talked about Chinese stocks. I think that's one of them. You talked about Latin American stocks. I think that's one of them also. You know, what's going on out there in the market? Maybe sector specific in the United States, perhaps it's being ignored. Maybe something like healthcare or materials. Like, what's got your attention? You brought up dividends in Europe, which I thought was interesting. You know, what do you think is getting overlooked here?
You know, I hate to be one of these people. You know, you kind of have like these conservative hard hats on Twitter who are constantly bearish tech and bullish on energy. You know who I'm talking about. You know, I mean, you have people who are like constantly like energy's cheap and tech is expensive and you should buy energy.
They're called value traps. Value traps.
Yeah, I think that actually might work here. Like I'm pretty bullish on oil. And I think that trade actually might work. So it's something that I can't really figure out. I mean, if Trump is talking about drill baby drill, and what does that mean? Does that mean we're going to have $50 oil? Or does that mean we're going to have just a surplus of oil? But you know, XLE acts pretty well. And if you look at a chart of XLE, like that has been in a consolidation for about 2 years plus. And if that breaks out, it's going to run. So
here, why don't you throw up that new slide 2 there? And not only is this a 2-year consolidation in the XLE, I love that you brought this up, Jared. Not only is this a 2-year consolidation in the XLE, throw up there slide 2, but I mean these highs go back to the 2008 peak, Jared, right? I mean, I know you know, but like for those of you who don't know, these are the 08 highs. We're still below the highs from 17 years ago. Like that's wild, no?
Yeah. Yeah. So I think that's going to work.
And then what's the confirmation that it's working, do you think? Is it like a breakout to new highs and sticking that landing? Like what do you look, or is it rotation into maybe some of the oil services?
No, I mean, I think if you get XLE out to new highs, if you get XLE to print 100, if it prints par, then I it's probably going to run to 120.
So ExxonMobil, Chevron, the usual suspects, or you'd go
Yeah,
down
and
the cap scale?
ExxonMobil has been acting pretty well. I think last time I looked, I haven't looked at it in a while, but
looks like the XLE, right? I mean, got kicked out of the Dow right before it outperformed every single Dow stock, right? That's par for the course.
That's don't get me started on the Dow. We're gonna add Walgreens on the all-time highs and delete and add Salesforce too. We're gonna add Salesforce and we're gonna
Right.
delete ExxonMobil.
Right. Yeah. Geniuses over there at Dow Jones. We appreciate that. Jared Dillian, you've given us a lot of your time. I appreciate it. Any final trades you want to throw out there? Final trade?
Check out Colombia. There's a Colombia ETF.
GXG.
GXG. Yep. That's
Nobody knows that this exists, Jared. You know this, right? Like nobody knows that it exists. People are like, wait a minute, Colombia has an ETF? Yes.
It's not very liquid. Be careful. Don't buy it like a jerk.
It's been around forever, though.
Yeah.
Like it's not like a new ETF. It's been around forever. They didn't care about it then. They don't care about it now. Nobody cares. Nobody knows it exists. But
and
Jared
the funny
and
thing is that it actually started to go up. Colombia started to go up when Trump picked a fight with Gustavo Petro over the migrants, over sending migrants back. And people started to realize, hey, maybe this guy Petro isn't long for the job. So like I said, there's an election next year, and like 6 times there's banks that trade for 3.5 times in Colombia. It's incredible. And the same is also true for Brazil, but Brazil doesn't have an election for 3 years. So
the Colombian peso absolutely ripping since the Trump landslide victory. Absolutely ripping. Right? So it's not just the stocks in Colombia, but you're seeing it in the currency themselves, and not just the Colombian peso. Look at the Brazilian real, look at the Chilean peso, like go down the list and you're seeing some serious action there, right?
Yep.
Jared, where can the folks find you? The chat's going wild. They love you. Where can they find you?
Go to dailydirtnap.com, and if you want to subscribe to the newsletter, it's right there on the website. So happy to have you.
What about the book? Tell them about the book.
Yes. So Night Moves and Other Stories, which is a collection of short stories. Fantastic reviews on Amazon, 4.7 on Amazon. People love this book. It's pure pleasure reading. It's all it is fiction. It's just short stories. You're going to love it.
Love it. Jared, thank you so much for being here. We'll have you on soon. I appreciate all the optimism this time. It's a bull market. Let's fucking go.
Thanks.
Adios. Ladies and gentlemen, Mr. Jared Dillian, go get his book. Bullish Colombia. That is a first time in the history of the morning show. Someone comes in all excited about Colombia ETF.
That's exactly where I was going to go. That was my biggest takeaway too. I think he mentioned a handful of other countries out there as well. Yeah, interesting stuff. Commodities, commodity countries. We're seeing it in the currencies. This all jives. And then also just this China sentiment, guys, is real. Like just, we have all these people on all the time. Look at Jared. He's looking internationally, but no to China. That's just the vibe. So many.
And by the way, think about what
anybody's right or wrong.
What were his reasons? Trade war, communism, like all the usual suspects of why people don't want to own China.
All fantastic reasons, by the way.
Great reasons. Not a secret.
But they're cheap like the others. People still don't want them. So
good.
And then it has been said, JC, on this show that when they say tariffs, we hit buy. So Cleveland Cliffs, example number million today. I think Trump just announced across the board like 25% tariffs on steel companies. So what is the market reaction? The largest steel producer in North America is having one of its best days in years, out up 15% out here today. See how it works?
And speaking of the libs getting owned and like that chart that we showed before, if you want to just throw up that chart
Inflation
again.
chart?
No. Go to the one where the liberals are all angry, and then the Republicans are more optimistic.
Yeah, the
and
inflation
embracing all the winning.
This
So
is
why do you
crazy.
think people get so butthurt every time I say that it was a Trump landslide victory? Was it not? Was the market not pricing in a Trump landslide victory? And was that not a Trump landslide victory? Like, are we living in the same reality, or is it just like Fugazi, woo?
This chart, if you understand it, should scare you.
It should scare you just how psychotic some of
Yeah.
these people are. By the way,
Right.
to be clear, to be fair, it's probably
is sad
psychotic
for
for both
humans.
of them. Like the Republicans are probably embracing too much winning, and the Democrats are too butthurt. Like I think they're both crazy.
Well, the
right?
Republican line here is just as bad. Inflation expectations drop to 0%.
Yeah. I think it's a little aggressive, Republicans. A little aggressive.
It's crazy. It's
We
crazy.
do
This
it
is
both
this.
ways around here, right? We're not like just hating on the butthurt liberals. It's
No.
the Republicans that are maybe a little too optimistic there, right? Also crazy both ways.
The takeaway from this is that this is just the world that we live in, and this is the opportunity as a market participant to take advantage of this wacky behavior.
Can I quote the legend, Dr. Phil Perlman?
Yeah, please.
Can I? Okay.
Always.
To quote the legend, Dr. Phil Perlman, founder of the Pearl Institute, and I quote, "Here's the thing about behavioral economics. People are crazy."
Yep, the best. So good.
So good, so simple, so much money to be able to extract from understanding that statement and just how fucking crazy people are. So yesterday, over the weekend, are we bringing Jason Purz in? Is Purz here?
I thought, are we
Or
done
is he
talking?
just chiming in because he loves commodities and he's all excited? Yeah, bring him out. We don't need any just bring him on. I want to talk about this. So like yesterday, I'm talking with a nurse, right? What's up, Jason? How you doing, my man?
Hey guys, how is everybody doing?
So I'm talking to a nurse, and she's a nurse in New York City, and she's telling me that her coworkers are telling her that Trump is going to make it so that people can't take cash out of the banks. This is what she's telling me. True story. She's telling me that the stock market's going to crash. Like this is, and granted, she works in a very like liberal environment, right? So as we saw, but this is the sentiment out there. It was really fascinating. You know, hearing from civilians about the conversations that are being had behind closed doors. I mean, it's pretty psychotic. Like Donald Trump's not going to let you take your cash out of your account. Like, you really believe that? You know,
It's crazy.
But that's spot on. That's what everybody's thinking right now. It's the end of the world. It's the end of everything. If you're on one side of it, or if on the other side of it, you're at a zero inflation, everything will be fine forever.
Also, probably wrong, right? Jason?
Yeah. Also wrong. Very wrong.
Very wrong, right?
Very
So the
wrong.
Republicans, you're crazy too, right? So it's not just the libs, right?
Wow.
It was
Shout out
wild
James.
talking to civilians yesterday. I had good conversation with civilians.
You were talking to the civilians?
You have to talk to civilians every now and then, because if I talk to you two knuckleheads all day, then I'm just going to my own echo chamber, you know?
What a bull market party I went to on Saturday.
Did you?
Oh my.
Was it frothy or was it right on point?
No, it was feeling frothy, my friend. It was feeling frothy.
Was there
Had the band
caviar?
out there? It was catered, special.
Was there caviar?
Cupcake sushi. There was all sorts of
You
stuff.
know
There
what
was
we
no
need?
caviar.
Jason,
Caviar's
you know what
the
we need?
top. Caviar's the top.
You know what we need, Jason? We need a
What do we
chart
need?
of how many times Steve Strazza eats caviar, right? And if we can like chart it, and as the caviar starts increasing, we start like feeding the ducks, like in our stocks.
Ooh,
Like, can we
that's a good
chart
idea. Yeah.
Strazza's caviar consumption?
Every
Wait,
Friday,
how much caviar have you been eating, Steve?
I don't know. There's a place here. There's a place downtown called, shout out The Roost. They have happy hour caviar. So you can literally get caviar for, it's 50% off. And it's the best deal in the world. So we do it every time we drive by.
Every
Not bad.
time you drive
Not
by.
bad.
That sounds a little frothy.
When we're down south.
Maybe it's time to sell.
Maybe it's time. Jason, you know, you heard the conversation with Jared Dillian. He's Jason Purse is in the chat, loving the conversation with Jared.
Oh yeah, I'm so excited.
Tell me what was getting you so excited? Was it the fact that you and Jared can show your tattoos to one another and like
That's
you
part
know
of
like
it.
flex? You know, there's a little bit of that, right?
Yeah, a little bit of that.
Jason
No, I mean,
Purse
once
and
again,
Jared
I
Dillian
always love
leading the
when-
league in tattoos.
I always love when somebody comes in and they just have that one. I love when people go from very bearish to very bullish. You know, like that's kind of a thing I love to see. But two, I love to see people talk about, and we were just talking about this on last Wednesday on our meeting. So we were talking about Colombia, we were talking about the international stocks, we're talking about all these things, how they continue to move, and nobody's paying any attention to it. Colombia, I think, is leading the way for the year country-wise. That's phenomenal to see, and nobody's paying attention to it. So I just was really excited to hear somebody else kind of get on, talk about these things. But once again, you know, if you like Colombia, you should also like China. And I understand, you know, you can dislike, if you're fundamental, sure, you can dislike reasons for it, but we know that's not how markets work. Markets always fool the most people. And if we have this situation where we have, you know, communism, all these terrible things, and everybody hates it, it only makes me like it more. Most of the time, that means a bottom and sentiment bottom. And who's really left to sell? China? Nobody. Just crazy bulls like us buying it, and nobody left to sell it.
And when they start telling us about, you know, now it's time to buy China, we'll be selling it to them, right?
Yeah.
Sold to you. I don't think that's going to be anytime soon, though.
But you don't get this kind of offsides positioning in a huge market like this often. This is the kind of pitch that comes along every couple of years, you know, every other cycle. Like, this isn't normal, this kind of setup. It's almost too good to be true for me.
Well, it kind of is, because you've put on 8 China trades since the election. 6 of them have doubled.
No, 8 as of
they all
today.
doubled.
They're all doubled.
They all officially doubled. Okay, so, you know, you put on 8 China trades over the course of 3 months, and every single one at least doubles.
Yeah,
you know,
and that's
you
why
feel pretty good about that, Strazza.
And that's why we've put 8 trades on the same theme. We were doing this with speculative growth in Q4. People are like, why are you buying all these speculative growth stocks? Because they kept on doubling, right? If we could keep selling those doubles, we're going to take that capital, we're going to redeploy it, and then we just have a lot of lines out, right? And then we have exposure to all these different trends. Today,
a
we're
lot
going
of
to take
lines out. Hold on, explain the. Is that a fishing?
Yeah,
metaphor?
like when you're trolling for mahi, like you just want to put as many lines out as you can.
Explain to like the non-coasters, like the non-coastal elites.
So a line is
what
like a fishing line. You catch the fish on the fishing line, right?
I'm asking.
So wait, can you also explain BD's barbecue that's down there? That one where the best mahi spot is, and just tell everybody where the best mahi spot is in Key West. Bo's Fish Wagon, that's what it's called. Bo's Fish Wagon.
Bo's Fish Wagon.
Wagon.
They have the best fish tacos. They really do.
Is that also where Breakout Multiplier's name came from?
You're right. They're BOs.
Whoa! Fun facts being dropped here today.
BO is like a famous local, and it's like his restaurant. Like you'll see the guy around town. He's like some old fisherman opened up a little fish shack. It's funny.
It's an amazing place though. The food's the
Best
best mahi
Harbor. Anybody go to Whale Harbor anymore, or is that just old school?
No.
Nobody goes there? Because back in the day, like 25, 30 years ago, that's where we used to go.
Nope.
Not anymore? All right.
Never hear about it.
Jason, before we do a little recess and get back to work here, any thoughts on what you're seeing out there? Any thoughts on the commodities? Any thoughts on the Forex markets?
Oh yeah. Can we throw up some of those slides? So I brought a dollar slide. Obviously, I'm always going to bring a dollar slide.
Nice.
I brought a gold slide. We'll just go through a couple of these. So just starting out with the dollar, and this is something that I think is really significant, which is we haven't been, and Steve and I were talking about this the other day. We haven't been in a dollar down cycle in so long that the market is just not made for it at the moment.
Yeah.
So if you're looking at this thing where it's like, okay, well, where's all the ETFs that are long commodities? Where's all the short bond ETFs? Why is there 50 million bond ETFs? JC, you and I were talking at the event. Hey, go find out all those bond ETFs. Rick's looking through them and he's like, there's like 1,000 of these things. And I'm like, really? And so I look and there's literally like 1,000 of them. So it's like the market is made for a strong bond, strong dollar environment. And so what are people going to do when we get into a weak dollar environment is kind of something I wanted to talk about today. So go to the next slide. So if you look at this, we're coming out of a yield curve inversion. And JC, I sent this chart to you the other day as well. When we're looking at this, most of the time we either see a late cycle environment where commodities just rip for a little bit, or we see a early cycle where commodities are just kind of trending. And if you go all the way back even to the 70s, you'll see this as well. So looking at this, it looks like commodities are ready to start moving. And especially as yield, people think yields coming off is when commodities go to die. And it's not that case. So most of the time yields can come off. And most of the time, if the Feds also start to catch up with it, yields start to move higher, inflation starts to move higher, and then oil and most of those energy commodities start to take off. And we're already seeing it in a lot of areas. Hit the next slide. We'll just fly through these. So gold here is hitting new all-time highs, and it continues to hit new highs. And at the gold rush, we've been talking about this for a while. Sam had a great target. We hit that target. We told people to buy the dip again. Started to buy that dip again. Now we're breaking out back to the upside. I mean, this is a strong trend, and I don't think it's anywhere near the end. I think this is part of the long-term cycle that you and I made a video about, JC, talking about the commodity super cycle. So this is probably the part of the long-term cycle where gold just kind of trends, and some of these other ones start to catch up. We hit the next slide. And so copper is the next one, and Sam's been talking about this one like crazy, and he's been spot on about it, which is once gold starts to move, copper usually follows it. I can't look at a situation in the last 50 years where copper didn't follow gold's move. So now it's hitting a 100-day high. Normally when copper hits a 100-day high, there's a nice move. Sometimes it's a false start. Of course, that happens. We're traders. We're trading probabilities. But that's kind of what I'm looking at here is, hey, this might just be starting. Gold's already moving like crazy. Copper's probably going to catch up next. And hop to the next chart. And so I just brought this today real fast. So this is basically a look at the 2000s. So basically 99. Oil goes not negative at that point. Sorry, that's 2020. In 1999, oil hit single digits, so under $10 a barrel. And basically after that, oil continues to move like crazy. And the big takeaway from this chart is that sometimes there's areas in the market like the S&P 500 might be underperforming for many years. And that's okay. That happens. And so this is when rotations happen. So rotating into other asset classes becomes even more important when you're looking at a chart like this. Understand that there's other areas you can hang out in. China, that's after the pullback into the great financial crisis. China was up 300% at one point during that run. Obviously, gold did very well. Energy sector did very well. So once again, look at these other areas. Try to find other things to buy and pay attention to in this market. You're going to make a lot of money.
You like what Jared said about energy?
Yes. So and once again, it's you got to look at it and take the signals as they come. Do I think that energy is probably at the beginning of a big move? Yes. Do I think there's going to be a lot of false starts? Yes. I think it's going to be tough. I think it's going to be a very rough ride at times, but I do think over the next 5 years, we're going to see energy probably continue to make a big move. And I think this year, energy is probably going to break out and probably make a big move. It could be one of the leading sectors. Now, once again, I'd rather right now, financials is doing very well. I'd rather look at China. I'd rather look at these other areas. But if energy breaks out, you're going to want to buy that as well.
Jason, do you talk to civilians about the market often or no?
I talk to civilians, yeah.
And this is Ohio, so where you live is somewhere in the middle, or is it leaning right?
Oh, right, definitely leaning right. Yeah.
Are they optimistic and think inflation is going to zero and Trump is the savior?
Yes.
Yeah.
So if most of the time, if you voted for Donald Trump, what I'm seeing from any of my friends who talk about it is inflation is dead. You're an idiot for ever thinking energy or oil prices will ever go up again. Jared talked about drill baby drill, and once again, it's not. Sure, there's drill baby drill, but when have we drilled the most? It's usually under Democrats. So over the years, if you look at Obama, it's when we started becoming dominant in our production of energy. but also the refining capabilities here in the United States aren't that high. So once again, we still have to work. Even if we drilled everything we had, we wouldn't be able to supply us and the entire world like we our exports and imports. We still would have to import from Saudi Arabia. We'd still have to import from other areas. It's impossible to make oil prices just go down to $50 because we want to drill more. So I don't think that's going to be this catalyst that Jared's talking about, where it's going to take us down to $50. I think it's more of, hey, everybody's thinking this way. It's probably not going to be that way. And take the signals as they come. Oil's held up extremely well. If copper starts to really move, oil's going to follow it. And so it's like the way the cycle always goes. It's gold, then copper, and then oil. So I'd be ready for oil to follow it at some point.
Yeah, I'm with you. Let's do a little recess and we'll get back to work. What do you say?
Let's do it.
Hit it, Fonz. I want to give a shout out to the Philadelphia Eagles, the city of Philadelphia. I couldn't care less about the Eagles. I don't have a horse in the race. I don't hate the Eagles. I don't like the Eagles. They're just kind of there. I do like Philly. I've had some great experiences since moving back to the East Coast, going to Philly. So shout out Philly. And Poconos, man. I've been to the Poconos in the summer. I'm pretty sure I went to the spa. They got a spa called Woodlock, which is fantastic. And I did go there, I think last winter or the winter before. But I was in the Lake Harmony area and it was lovely. It was very nice. There were deer like all over the yard, like all over the backyard. Lovely time I had in the Poconos, bullish Poconos. I might even buy a house up there. They're cheap.
Nice.
Love it.
It's a beautiful area.
Yeah.
Look, I just want to mention some insider activity. We track this every day on the Hot Corner, and there's a really big one. Uber's stock is up about 20% just over the course of the last 3 sessions. Bill Ackman has come out and announced 2 days ago, two trading days ago, a $2.3 billion stake, gobbled up a bunch of shares back in January. Maybe he's not even done yet. Seems like investors are, turning back to Uber lately, and its stock's really got a nice rip. And I think this is right on par with what Ackman does. He's stepping in, noticing something that he thinks is cheap from an intrinsic value standpoint. He knows that they're a cash cow, so at the end of the day, he could just force a bigger buyback or a dividend payment, probably protect his ass that way. I love this. I really, really love this activist stake from Ackman in Uber.
Jay?
Recess wise, I don't got much, man. It's winter here, so I went riding with some friends this weekend. That was awesome. Got to watch one of my friends who's older than me do something crazy.
What are you riding exactly? Not bicycle.
I ride a BMX bike. Yeah.
Really?
Yeah. So I ride BMX bikes. There's an indoor skate park in Cleveland. So it's indoor. So when I say that, I should always say indoor. So it's indoor bike park in Cleveland. So I went and did that. Played some basketball games with some friends. It was a chill, very fun weekend. Me and the girl went out, got some plants, because I'm crazy about plants. And so it was a chill weekend. Very good.
We need to do a deep dive. We need to do a deep dive on bees with Jason.
Oh man, don't get me started. So we could do the whole morning show. We could start at 8:30 and probably end about 5 o'clock. And we
hold on, but I want to bring in Stephanie. I don't know if you guys know, Stephanie is very big into the vibrations and whatnot. James Bartoloni also into the vibrations. Look at Strazza's face. Look at his face. We should have a live event with you, Bartoloni, and Stephanie. We'll invite Stephanie also, and we'll call it Good Vibrations.
I'm ready.
We'll just talk about bees and the Beach Boys and vibrations. What do you say?
I'm good. I mean, this is
Strazza's like, that sounds fucking terrible. I'm not gonna.
Strazza hates it. Strazza will.
Nobody invited you, Strazza. Don't worry, you're not coming.
Strazza will not be there.
On YouTube TV, they do these peaceful commercials where you'll listen to like water washing up. You know what I'm talking about?
Yeah.
We should have like commercials on stock market TV, and it's just Jason like tending to his bees, like buzzing around.
You know dude, I'm ready, dude. I'm ready.
We can put special microphones. Can we do that? I think we could do that. Like special.
Well, that's why I don't have anything.
Send Giancarlo over. He'll figure it out.
Usually I have something cool for recess. I could talk about the bees or something. And it's like it's winter here. I'm sorry, guys. I'm slacking.
And
One
what, the
last
bees
thing.
just stay in the box? Is that what happens?
Yeah, I mean, we have natives and we have all types. I mean, I could show everybody wasps. I could show everybody everything, man.
We gotta do this.
I'm extensively into this, so I got a lot.
All right,
of,
we're gonna
lot of
do this. We're gonna have an event. It's gonna be called Good Vibrations. But before we run, I want to tell everybody today at 4:00. If you really want to know what's happening with China, we're saving it to 4. This whole show could have been about China, but instead, today at 4:00 Eastern time, right on stockmarkettv.com. Make sure to join us. All things China. Strazza has put on 8 trades in Breakout Multiplier, 8 China trades specifically since the election. Every single one has doubled in price. I will say that again.
And momentum is picking up.
8 trades since the election. They all doubled. Do you understand the words that are coming out of my mouth?
Last
That
week,
is
the
no
2 we
joke.
put on last week, JC, doubled 1 day. That's what's going on in China right now. It's information. So I'm excited about today's
So you
event.
make your money back pretty quickly on that product. Love it.
I like that.
Love
I like
it.
that. All right, guys. See you at 4:00 today. StockMarketTV.com. Thank you for being here. Thank you to Jared Dillon. Thank you, Jason Purrs. Thank you, Alfonso, on the 1s and 2s. Spencer Israel, good luck with the hangover. Steve Strazza, thank you for being here, and we will catch you tomorrow.
Bye, guys.
Later, guys.
I can't take no loss. I don't